Welcome to Fitz Factor, the show where you learn how to master the stock market with Dan Fitzpatrick, the stock market mentor. Dan is a savvy trader. He's featured regularly on Fox Business, CNBC, Investors Business Daily, and SiriusXM Radio. In this podcast, Dan shares his insights on trading, life, and attaining long-term success in the market.
I'll tell you something. What's been going on over the last couple years, maybe longer, but really just kind of the last couple years I'm talking about in the market. I mean, how many times have you heard, and this would include me too, how many times have you heard people talking about impending recession? Oh, we're going to have a recession. The Fed's gone too far. The Fed always overshoots, which, by the way, they do. So the market's going to really be imploding. So you better keep a lot of money in fixed income, or at least out of the market, et cetera, et cetera. In other words, we're kind of looking for the worst. That's the thing. We always want to be looking at the worst case scenario. Anyway, so the market's always looking for the worst, and it's not really finding it, frankly. So what we want to do is stop thinking about that kind of stuff. We just want to look and see, okay, what's working? Let's not anticipate what's working, because that kind of anticipation has cost a lot of money in terms of either you're just kind of in the wrong stocks, and so you're losing money, or you're just not in the right stocks, and then you're not making money and the market goes up without you. So in my mind, looking at all this stuff that you'll hear kind of value-oriented money managers talk about, that's all well and good. And there's no reason for me to go into that as far as why they are doing it. But let's just say it's not for us. We trade momentum. That's what we do. We don't apologize for it. And it's actually fairly simple. Here's what you do. You buy them when they're going up. And then, well, when do I sell? Well, when they stop going up. That's it. That's what we do. And then when we've sold something because it's stopped going up, we look to rotate into something else that's doing what? Going up. That's what we do. Now, there are like 98 nuances in that, because you don't just go buy every day, et cetera, et cetera. You guys know all that. We talk about it all the time. You got to have a proper entry. You need to be able to trade kind of around a position to scale out, as opposed to just go all out. And the reason is because when you're in a stock that's, and I've made this mistake and I still make it sometimes. Some would say I make it every time. But when you say my position's totally working, it's awesome, I'm going to sell it all. What you're doing is you're timing the market now. Now you're predicting that this trade is done, that the stock is done going up. Scott, from what I can see, is really good at not doing that. Like, Scott, I see you're talking about these various stocks, and I'm really proud of you. You're going like, oh yeah, I got a great trade in this. It's doing really well. Yeah, I know it's going lower, but I'm keeping I can hold a small position in this stock through the pullback and stuff like that. So that's good training for people. That's good for people to see what you're doing, because the one thing about trading is it's a lonely endeavor for everybody that's on this. For all of us, me and Scott as well. Look around you. Is there anybody else sitting next to you? Is there anybody that when you're done with this, you can say, wow, Dan sure talked a lot about football. He's full of crap. I love Kelsey. No, you're not going to do that, because there's nobody around. There might be somebody upstairs, or your kid, of course, in the basement. Of course, it's not going to move out till he's 35, but you're trading alone. And so because of that, you're not really getting any feedback. You're not really talking things over with somebody else. So it's really nice to have Scott in the mix, because Scott's a little different than me as far as his trading. So essentially, you're kind of, at least on these, in these sessions, and then throughout the week with the videos, you're kind of going back and forth with other people, with me and Scott. And then you can also go in the forum and chat with other people. But when you're doing that kind of thing and you have an orientation towards learning and improving your trading.
If you're getting value from this podcast, click the subscribe button and sign up for Dan's free daily videos at stockmarketmentor.com.
You will learn from other people. Like when you hear, I saw somebody, I forget who it was, post on AMD. Geez, I closed out my entire position last week or whenever. I wished I'd held it. Okay, that's good knowledge to have. That's good for you to look at that and then look at the chart and say, and learn from that. And what you should be learning overall is that when stocks are in uptrends, it takes a long time for those uptrends to reverse. That's why there's 4 cycles in any stock, any market. There's the base building process, there's the accumulation or the markup phase, and then there's the big dump, right? No, wrong. Then there's the process of topping. That's the process of distribution. And that's the 3rd phase. And then finally, you get the markdown phase where nobody's really buying and then the stock is trending lower. But the thing is, on that 3rd phase, on that distribution phase, that may not be the final distribution. It may just be some profit taking that leads to essentially another base, which is the 1st phase, another base that then supports the next move higher. And so if you are just selling your positions when you think it's done going up, what you're doing is you're forgetting about the 3rd stage. You're forgetting about, and listen to me, I'm giving you pearls here. You can thank me later for all the money that you're making. What you're doing is you are forgetting about the 3rd phase of distribution and also the dynamics, the varying dynamics that make up that distribution phase. Again, it could be profit taking from people like you and me who say, oh, the stock's gone up enough. And who's waiting for that stock? All these institutions who are just tired of bidding against themselves. So they've taken their foot off the gas. They're waiting for the stock to come in and then they'll buy. Okay. And by the way, thanks for the thumbs up. Guys, give me the emojis or whatever they are when I'm saying stuff that's helpful to you, because what I'm not doing right at this moment is we're not looking at charts. Okay. Part of the value here, at least what I'm aiming for, part of the value is for me to help you actually learn to trade in your mind, actually translate what you know into your actions, which if that's done properly, you're going to wind up having a little bit of a lower back issue if you sit too long, because you'll be a little bit lopsided because your damn wallet in your back pocket is so big. Okay. You're going to have a George Costanza wallet because you're making more money.
My back is killing me.
Of course, because of that wallet. You got a filing cabinet under half of your ass.
This is an organizer, a secretary, and a friend.
The point is, on this 3rd phase, and by the way, this could be on a 1-minute chart. It could be on a 9-year chart. It's all the same. The cycles are all the same. Sideways, up, sideways again, up, down. It's all the same. And so your challenge is to be able to trade within that structure. And the way you trade within that structure is to back off a little bit and say, you know what? I don't know every damn thing about this market. I don't know everything about this stock, but I've got a good run going here. And the stock looks overextended. It's up 15% from this last base from where I bought. It's up 15% in 6 days or something. All right, well, you look at that and do you say, I got to close that position? No, because the only reason a stock is up that much is if there's institutional buying. Instead, what you're doing is you're saying, wow, this is up really good. I got to take some profits because that will reduce the cost basis in the rest of my shares. Now I got a really good trade going. I've taken a little bit off the table. I've reduced my risk, and I'm still comfortable in holding the position because I do think that institutions are going to buy this stock, and I don't want to get shaken completely out. You can get shaken out of an entry that you just made because you're worried about taking a loss. Okay, that's going to happen. That's just part of trading. If you can't handle that, you need to close your account and do something else. I recommend like barber school, maybe open up a convenience store. The point is, you need to be able to manage your risk. That's what you've got to be thinking about. You don't want to, I'm a trader. Well, what does that mean? It means that the way most people look at it, if you mention to somebody, I trade stocks or I trade options, and they're not familiar with the market, they look at you as if you're really an exciting person. And that's the road to poverty. But if you say, well, I'm a risk manager, really, what's about that? Well, I measure risk in stocks and options. That's more accurate as far as what we do. So the better you are at measuring and managing your risk, the thicker your wallet's going to get and the more chiropractic treatments you're going to get. So anyway, with that said, that's my diatribe there.
Thanks for listening to Fitz Factor with Dan Fitzpatrick. If you like this, then you'll love Dan's premium service at stockmarketmentor.com, where you can learn how to trade stocks, options, and cryptocurrencies. Click the link below and get access to real-time trading alerts, a community of traders just like you, and live training sessions each week. Get the trading edge that you need at stockmarketmentor.com.